Look at the industrial scale of the San Pedro waterfront. If you are only watching the water, you are missing the actual trade. This map tracks the economic geometry of the West Harbor project. A $500 million liquidity injection directly on the water creates a physical bottleneck. That bottleneck forces immense overflow traffic directly into the inland grids of 6th, 7th, and Pacific Avenue. If you own a commercial asset inside this overflow zone, you are positioned where the highest concentration of inland demand will bottleneck as the waterfront reaches capacity. Yet, local landlords consistently underprice these properties. They underwrite their buildings based on what it costs to maintain them over the decades, or they attach a premium based on sentimental neighborhood history, rather than actual yield-generating potential. Operating with legacy math while a massive redevelopment happens blocks away creates a pricing gap. Professional buyers step in, exploit that gap, and capture the upside. Operating without sub-market data means transferring your family's equity directly to an institutional balance sheet. The defense starts by rejecting wholesaler pricing. Aggressive developers use outbound teams to hunt for legacy owners who do not understand their property's future adjusted value. They offer all-cash, quick-close deals that sit 30 to 40% below the asset's actual market worth. To defend that value, you must restructure the liability. This table breaks down the mechanical difference between lease structures. On the left, a legacy modified gross lease leaves the landlord eating the rising costs of insurance, taxes, and maintenance. On the right, a triple net or NNN lease transfers those exact operational burdens to the tenant. By removing overhead costs from your ledger, the cash flow you keep increases. Your net operating income spikes upward instantly, without you having to drive a single nail or renovate a single wall. Because commercial property values are calculated by dividing net operating income by the market cap rate, this single contract adjustment acts as a mathematical multiplier. A higher NOI manufactures hundreds of thousands of dollars in new property equity. In the commercial arena, physical dirt does not dictate value. Asset pricing is a strict algorithmic function of yield. Optimizing the lease structure is the specific mechanism used to force market appreciation on demand. To secure that yield, owners must stop underwriting out of fear. In high-interest environments, landlords panic over vacant storefronts, signing 10-year, flat-rate leases with weak annual increases just to keep a storefront occupied. The West Harbor development shifts the local tenant profile. Premium regional hospitality and boutique corporate brands are actively hunting for inland space right now. They need to secure square footage near the harbor to capture the incoming consumer base, but they need to escape the premium waterfront rents. Mentally review the paper currently governing your building. Are you locked into a flat rate agreement that prevents you from swapping in a high credit tenant capable of paying premium dollar per square foot rates? If you are ready to exit the management business, this flowchart outlines the 1031 exchange. It maps how you can sell a high-maintenance, historic Los Angeles building and transfer the equity into a passive, single-tenant corporate asset anywhere in the country. This specific IRS provision allows you to route around Los Angeles County capital gains taxes. You trade fixing toilets for collecting a passive corporate rent check, preserving the full value of your generational wealth. Deploying institutional tenant upgrades and tax-deferred exits shifts you out of the reactive neighborhood landlord mindset and into a professional portfolio management strategy. This matrix outlines the complete top-tier spillover checklist. It is a 4-step pipeline. Reject wholesale lowballs, convert legacy agreements to triple net leases, upgrade to premium tenants, and execute a 1031 exchange. Executing these without institutional-grade market data leads to significant capital loss. Edwin Duterte, an EXP commercial investment advisor, provides San Pedro landowners with the localized data required to run this institutional playbook. Stop underwriting your building like it is 2015. Go to toptiercommercial.com right now to pull your customized downtown San Pedro spillover valuation matrix. The physical dirt of San Pedro is resetting to a new economic ceiling dictated by a waterfront billions of dollars in the making. Partnering with a data-driven advisor ensures your family's real estate wealth scales directly alongside it.